Good morning, ladies and gentlemen. welcome. It's September 19th, and this month has almost gone as well. And Jerome Powell, right, has done it. He's cut 50 basis points. Yesterday was the day, Wednesday. We got some interesting, kind of choppy, sloppy, volatile movement that happened overall. No real large trend move or continuation from that, but a lot of movement, a lot of volatility, and some opportunity. Now, I wouldn't say that this was one of the most, I guess, it wasn't necessarily the easiest day to trade, nor was it like the easiest day to read or get a read on overall from that Fed announcement and Fed moves. I barely traded it, which I think a lot of people looking back on it, you're gonna look at it and say, wow, I see some like a very large swings, a lot of opportunity. Harder to look at it real time versus when it actually already happened. So let's talk about the Fed. Um, Federal Reserve got very aggressive, right? We can open up this chart. We'll take a look at how things kind of shaped up yesterday and this like massive bid on the overnight session. But the aggression came on yesterday. So beginning a new easing cycle with a pretty large cut in comparison to the single cut, which originally was expected about a few weeks ago, but trying to take it slow and steady would have seemed to be the right move at the start. But there you go, aggression right on the way, right out of the gate. So the jumbo 50% basis point rate cut was unanimously voted upon 11 to 1, while a slim majority of policymakers, 10 out of 19 officials, saw that the need to lower rates by at least an extra half point across meetings in November and December was expected. So it's all being geared towards a soft landing with the eyes on the FOMC now, trained on the labor market as inflation does move closer to 2%. The overall, what's it called? The soft landing approach and the labor market, the jobs numbers are going to be very, very impactful. I think that now we're in a moment where jobs numbers and inflation data, bad data, is going to be very aggressively bearish for the market. So Fed Chair Jerome Powell said that we are committed to maintaining our economy's strength. The decisions reflect our growing confidence that with an appropriate recalibration of our policy stance, strength in the labor market can be maintained. To me, the logic of this, both from an economic standpoint and also from a risk management standpoint, was clear. You can take this as a sign of our commitment not to get behind. So I guess pressure was on. Other central banks around the world have been cutting. They saw inflation creep towards that 2% target and they started slashing like crazy. So while there was also plenty of chatter going on before the decision, many thought that the central bank would start off on a cautious note, right, as seen in many expected polls, right? But overall, if we looked at the Fed's funds rate yesterday, they were pricing in like 65% of a double cut into it. So that's mainly what I look at. That's all I care about. It also took the markets a while to digest the big cut and that and what that level might say about the economy. So the S&P 500 initially rose towards that all-time high, right? The SPY, I believe, tapped on the all-time high on the ETF before being a little dragged down towards the end of the day. And I honestly thought that we'd start a little sell-off as how we closed pretty much when we started that nosedive on the futures towards the latter portion of the Jerome Powell conference, trading down into 56, like 77 or whatever it was. I was like, this looks pretty good for that continuation of the downside, but that level held super aggressively, and then overnight, these like strong rallies through a lot of massive imbalanced buyers. That kind of flipped the script, and now we're trading very, very close to an S&P back adjusted all-time high. So helping clarify matters was the Fed's so-called dot plot that we should be fairly interested in. Containing within the summary of economic projections, it projected that the funds rate would hit 3.4% by the end of next year, from the current 4.75 to 5% range, and fell from the 4.1% estimate in June. So a pretty large, significant move here. Jerome Powell and his friends are clearly not taking any chances this time around after falling behind this curve in 2021 by forecasting a short-lived rise in inflation. Remember, transitory. Long story short, transitory and inflation no longer being brought up by the Fed. So we got a pretty aggressive pop across all assets on the overnight session. It's just one big thing. Tech is such a freaking laggard. Now I'm not expecting tech to rally 10% if the S&P is up like 1-2%, but it's really got to get its act together if we're going to see that continuation to the upside momentum and start bursting through all-time highs. Nasdaq still hasn't been able to break the highs that were made in late August, while the S&P is, I think, where did we trade on these spoos? On the futures. 79 was the peak. So about 3 points away, 4 points away, let's call it, from a new all-time high. NASDAQ, on the other hand, very far away. I think the back adjusted all-time high is at 2130. So we only have about 1,040 points to go. It's a big move that's expected realistically. So all in all, right, we saw that J.P. Morgan's CEO Jamie Dimon also had a little chatter. He thinks that people are overly focused on the soft and hard landing debate, wording that geopolitical tensions pose the biggest risk to the global markets for the next 100 years. The most important thing that dwarfs all other things is the war in Ukraine, what's going on in Israel, Middle East, America's relations with China, and the attack on the rule of law that was set up after World War II, Dimon declared. So that's really far more important today than it's been since probably 1945, he added, pointing to threats of evil access countries like Iran, North Korea, and Russia. So he's taking a very different standpoint. Everyone's looking at Jerome Powell. It looks like he's thinking a century in advance. Now, we had some news this morning, but we're going into today with green across the board. Japan's up 2.1%, Hong Kong up 2%, China up 0.7, India up 0.3. In Europe, midday, London's up 1.2, Paris up 2, Frankfurt up 1.5, Dow Jones in the States up 1.2, S&P up 1.6, Nasdaq up 2.1, crude oil is up just shy of a percentage point, gold up 0.5% after slipping yesterday, Bitcoin up nearly 5%. So everything is just like rip into the upside right now on this overnight session with a pretty strong bid. Now, is this bid going to sustain today? That's the key metric. Are we going to be able to sustain this bid and go into the all-time high? We're so freaking close to the all-time high on the S&P. We may as well tap it realistically. That's the impression I'm under. I think that the buyers do come in on dip opportunities. The profile does look very fragile. If you take a look at the S&P 500 profile, super fragile right now, right? It's very low volume going lower. So we got to be very cautious and understanding of that. So realistically, as long as the auction low areas hold 47, 45-ish area on the S&P, I'm still looking for some buyers to try and come into those prices, right? It is a decent pullback, but I got to be a little more patient, wait for things to settle down, and look for some of that buy momentum to come in at lower prices. So I do want to be bullish. I think that all-time highs are so close. They're in reach. They want to get tagged, then we'll see what goes on and how things roll over. I wouldn't be surprised to see like an early morning pullback, get some better buyers on board, and then kind of go from there. So that's what I'll be watching to start the day. I want to see if we hold any kind of dips. Like there's a midpoint level around 57, like 59, but I'm more focused on 57.45. That trades at some point today. Anything above like 83, 84 on the spoos, I think should be bullish. So let's go from there. Pretty strong expansion on the overnight. The worst thing that the buyers could do is let this thing drop back under 57.30 on the S&P, because it just cleans up the auction to the downside and it could be a massive reversal. So they really got to stay in control here. So let's do that. I hope everyone has a great trading day. We'll wrap up tomorrow and the week with a stream, and I'll see you guys then. So thank you for watching, and we'll chat soon.